Hey everybody, this is Jim at SP500chart.com. It's about 4:20 p.m. on February 26, 2013. We're going to take a look at the S&P chart. Before we do so, I always need to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, just a guy that draws lines on charts. We're starting off today with a long-range look of what has taken place over the last 4+ years. And basically, I did this little study, if you will, where I was looking at the volume of rallies. And what I mean, I don't mean like volume like number of shares, but I mean the volume as measured by the time it took for a rally to reach a top off of a bottom, and then the gains that were made during that same time. So what I've come up with is this chart that has 1, 2, 3, 4, 5 rectangles in it. Each one starts at either a major or an intermediate bottom, then ends with an intermediate top. It doesn't end with a major top yet because we have not seen one since 2009. We haven't seen one since 2007. So if we look at this in these terms, you can really see how it's beginning to be a situation of diminishing returns for going into this market. We've got a couple of long-range trend lines that we've discussed. We have this brown line that has been tagged one. I'm not counting this because it got over it here. It's been tagged 1, 2, 3, 4 times, each time turning the market back, including just recently, as we have seen. And it looks like we're put an asterisk by this one, because we're not a totally thoroughly done deal yet on this being a top. I think it is, but we've got a couple things that could save the bacon on this right now, and we'll take a look at that too. Then we have this long-term blue line, which really just touches 3 places. Here it misses, here it misses, and then here again. So everything is obviously getting now in a constricted trading range. And if that continues to hold true, then we have what should be a theoretical limit on how high this market can get. And that would be the apex of these 2 lines, which is just a hair over 1600. So let's take now a closer look. Looking now at a daily chart, I want to show you that we have these yellowish lines, and it's when these lines are broken that we really establish a downtrend. So this line got broken, back tested, and then clearly we were in a downtrend. And then we established a new rising support line. Got broken, back test, we were in a downtrend. Established a new rising support line. Got broken, didn't quite get back tested, then we were in another downtrend. Now we have been in a little bit different looking channel think I may. Let's see if we can get this on a 2-hour chart. Yeah, I think that shows us what we need. What makes this look a little different is the fact that much of what's been taking place has been taking place in the upper end of this channel. This is not part of the channel line, by the way. It is this red line here. This red line here has been operating for all of 2013 up until just a few days ago. So now I think we need to watch this bottom line right here. Because if this line breaks, then it looks to me like we are then destined to come down and see if we form another bottom someplace else that is analogous to where these bottoms have been formed before. So let's take a look at this again. Top, bottom. This one's a real mess here, but top, bottom, looks like a top, but we won't know for sure until this line breaks. Then we start to look to see if we get a bottom that is along the same relational path as these last three bottoms. So all that to say, we've got to watch this line right here, and this is why I say there is a potential for a save the bacon moment if this line holds. Well, I was looking for a different word. If this line holds, that works without the pregnant pause. So here we were looking at a potential head and shoulders pattern, this being the neckline. And I mentioned yesterday, wouldn't you know it, we go and we get another one of these truncated patterns where for whatever reason these things aren't coming to full maturity. So this neckline broke, and today we tried on a number of occasions to get back over that line, inched over it by a hair, maybe once or twice, but certainly not by any margin that carries any technical significance whatsoever. What's interesting, though, is our selling off of this little peak right here, which was really a back test of our red line, which I will now move into its proper place, is you can see that there was this kind of a downward trend that got established over the past, actually just over about a day and almost a half. And midday today, the S&P bucked that trend and came up to back test the neckline of this truncated head and shoulders top. Let's see if we start out tomorrow with downward pressure. That would be typical of a neckline back test. But we still, what's a good way to put this? We still have not violated that neckline by 1%. Even with the move that we had today, very close, with the day's low being, come on, come to me, tool. Why is that not working? There. With the day's low being about 1485 and this being 1498, that comes very close to being that percent that we're looking for, but not quite. So what's really interesting is if this neckline acts as a neckline and this pattern acts as a head and shoulders top, then we are destined to break this lower yellow line, because the height of our head and shoulders pattern is sufficient to mean we have to break that line in order for this pattern. And let me move this in order for this pattern to fulfill its minimum target. So one of two things is going to happen. The first thing is this pattern is legitimate, a head and shoulders top, and we will encounter more selling pressure that when it meets that minimum target, we will take out this rising yellow line. In which case, the pattern wins, this line fails. Or this line wins and the pattern fails. We won't know that until we get a test of this line. But right now, for me, I would put stock in this pattern because clearly it is a break of this rising trend line. We have an area back down here, and again, I'm not a big believer in any form of necessity of gaps that they have to close. I don't believe that. But I do believe they often do close. And the reason is because a gap creates selling pressure. Just the fact that there's a gap up means now there's people saying, hey, I got profits. And just people having profits is automatically a form of selling pressure at some point down the road. So if we break this yellow line, it's my feeling that we likely will come down and test this gap for gap support. But right now, two things to really watch, and obviously you can see over the next 8 to 9 trading sessions, it's either, I was going to say something kind of ugly, but as people would say in the South, it's either poop or get off the pot. And because we've got this line, which should be resistance and was shown at least for today to be resistance, then we've got this line that we sort of expect as support. But look, 9 days from now, those guys, they run into each other. So something will happen between now and then to either recover this pattern, which I think is still a possibility because we had that short little shoulder over here, and so it is possible that we could come back between these two lines again and form a little bit more of a right shoulder. I'm still open to that possibility. It looks a little bleaker after seeing this line stop the market twice today, 3 times actually. But that is a possibility. Remember, every trend line that's worth its salt eventually breaks. Okay? If you say, well, here's a trend line that never broke, then I would probably say, well, it wasn't much of a trend line. Because if a trend line never breaks, then that means it probably never was really defining a true trend. And what I mean by that is you can draw lines on charts that are just nuts. For example, I could go back here between the 18th and 22nd, 24th of January, and I could draw a line over this little top and over this little top and say, well, there's a trend line. And we extend it out into the next 2 years. We find out that this trend line, well, let's put it down here at the bottom. Well, that one broke. Well, you know what I'm saying. In other words, it has to be a carefully drawn trend line. This is a carefully drawn trend line. This is a carefully drawn trend line. This is certainly capable of breaking. In fact, I believe it will break, if not in the next few days, at some point when we have perhaps a larger and more significant top that we're looking at. This line will probably be part of that process, the breaking of this line. But so anyway, just to make a long story short, when you have this horizontal support line now turned into resistance, then you have a rising support line that has yet to be broken, and you see that they intersect in about 9 days. That's not the failure of technical analysis. What it is the inevitability of what is known in technical analysis as a broken trend line. So either this breaks, in which case we likely, I think, will head down to the low 1400s, or we get back into this pattern between 1498 and 1515 and work around in here a little bit more, at which point I think we still would be looking at a head and shoulders top. So guys, there is your video for today. If we look at a 5-minute chart, do we see anything of great significance? Well, like I said, we see our little channel right here that took us off this back test straight down for a day and a half. Now we got a little bit of a move up out of this as a back test of our neckline. I said that 3 times today we tested it once very early on and then twice later in the day. The question now becomes, does this little pattern that we formed throughout a good portion of the day, and I'm going to draw these lines as carefully as I can, does this play as a bear flag? We should know by just about tomorrow's open, I think. Because if this is a bear flag, it may be this little pennant shape. We may have broken it and back tested it late today, which means we could start off with weakness tomorrow. That's, again, this is a 5-minute pattern. Doesn't mean it's not of tremendous consequence, but we've seen in the past where these little patterns have worked pretty well. So let's see if this one does the same thing. Look, guys, thanks for watching. Thank you for your support. I'm glad I got through today's video without reminding myself of what I had for lunch. Take care.